Hello, everybody, and welcome to another episode. The Fed just cut rates, and this stock is about to explode. Today, I'm talking about Weyerhaeuser, a stock that has the stability of a dividend REIT, but the growth potential of a tech stock. Its variable dividend is tied directly to the price of lumber, and its entire future can be mapped out with just three key metrics. If your investment strategy is built on profiting from the housing market recovery, this is the perfect stock for you. So let's dive in. So again, today we are talking about Weyerhaeuser, the ticker's WY. Real quick, just a reminder, pause if you need to read the disclaimer. All right, so if you're already an expert on the company or if you want to skip the boring stuff, either jump to the chapter or use the timestamp in the description labeled 3 core metrics. All right, so to those of you who stayed, Weyerhaeuser is one of the largest timberland companies in the world. They own nearly 12,400,000 acres in the US, and they have long term licenses to operate in 14 million acres in Canada. The company is structured like a REIT where they aim to disperse 75 to 80% of their funds available for distribution. This is kind of like adjusted funds from operations. This comes from their profits on lumber sales rather than collecting rent like other REITs do. The fluctuating price of the material they produce, lumber, means the dividend given to shareholders is also variable. There is a base 21-cent quarterly distribution with a special dividend in quarter 1 each year if they generated excess cash the previous year, which would again come from those lumber sales. So a little bit of housekeeping. With this stock, the structural thesis is kind of built around a housing recovery in the United States. The US is short 3 to 5 million homes, and when interest rates stabilize, builders must build. And in order to do that, they need lumber. The actual asset this company, or the actual asset you get when you purchase this company, is the 12.5 million acres of timberland. That's 12, not 10. Anyway, uh, real quick, although this is a REIT and it is technically a dividend and income play, it is not insurance. If the economy crashes, Weyerhaeuser will also crash. Um, the reason I'm buying this stock is for the recovery after the crash or the boom, when inflation is high and houses are going up like crazy. Uh, Unlike many other stocks, Weyerhaeuser has a hard floor. This floor comes from the 12.5 million acres of land, so even if earnings go to zero, the land is worth billions. For you dividend investors, I can completely understand why the 180% payout ratio would be concerning. However, I do encourage you to overlook this and to do thorough research on it. The figure that Yahoo Finance pulls up uses its GAAP earnings, which does not account for depreciation in appropriately. Depreciation can be used as a tax write-off. Therefore, it kind of balances itself out. So just do thorough research on it. Please let me know if you come to any contradictory conclusions to mine. I would be more than happy to hear it. But in general, my belief is that the dividend is safe based on the funds available for distribution. All right, to those of you that jumped ahead, welcome back. Here we have our holder dashboard, or our 3 core metrics. We have the NAHB Housing Market Index, the United States building permits, and the lumber price. All right, Care Team. So I want to teach you how you can create your own table for any stock that you would like to. So throughout the rest of this video, we're going to be filling out this table together. We'll kind of just walk you through my thought process and reasonings for stuff. Um, By the way, if you haven't already, please do me just one favor. Click the like button down below. Really helps other people find the channel. All right, so we have the 3 core metrics. Now we're going to go over the general strategy and we'll kind of puzzle it all together as we go along. Okay, so just a recap, the metrics are the NAHB Housing Market Index, US building permits, and the lumber price. So the 3 key metrics make this stock highly predictable. Phase 1 and Phase 2 work like flowcharts, where each bullet point leads to the next and are tied to real-world events. Phase 1 is going to be the ascent or growth mode. The macro trigger is interest rate decrease. That's where we're at right now. That is going to lead ultimately to a spike in volume in the housing market, which will then lead to higher building activity. As that building activity increases, the commodity price kind of squeezes. So lumber demand outpaces the supply and lumber prices skyrocket. The market reaction is the growth. Institutions bid up Weyerhaeuser to kind of follow the commodity price. And in our plan, this is when we exit. Price appreciation is peak. We're obviously not going to be able to time it perfectly, but using our metrics, we'll have a pretty good idea of when to exit, being able to take all of our profits, collect any dividends along the way. And because my plan specifically is only to take the profits, I will still hold a basically my initial investment in the stock to continue receiving those dividends. That then leads us to phase 2, which is the reversion. After we've gone through this entire cycle, eventually inflation starts to rise and the Fed needs to tighten rates. So that happens, we get that news. The cool down, home building activity slows, mortgages become expensive, and new housing starts drop. Next up is going to be the commodity reset. Lumber prices normalize, supply catches up, and margins compress. Then we have a market reaction. Weyerhaeuser stock price retracts, and short-term traders exit, and the price falls to the NAV floor. So the action we have here is to accumulate more after we had taken all of our profits and we continue to collect the dividends. We add after all of this to hopefully catch the next cycle. So this is going to be my long-running income play. By the way, I do apply the same data first logic to every stock I cover. If you want this kind of strategic analysis in your feed regularly, do hit subscribe. I hope to see you in future videos. All right, so that is going to bridge us into our first metric, the NAHB Housing Market Index. This metric is the ultimate sentiment indicator. A rising HMI means builders are more confident, which means they are placing larger orders with Weyerhaeuser. The current data as of November 2025 is 38, and as of December the 15th, which was yesterday as of me recording this video, it was 39. So it has been increasing. Well, I'll show you that in a second. The Fed's rate cut is a direct attempt to move this number higher, making it our real-time catalyst. When referencing this metric, in general, below 50 is a bearish indicator. This would be when we would want to accumulate. Above 50 is bullish. A housing boom is starting. So you can follow this link. This brings us to trading economics, where we can see the NAHB HMI. All right, so we're just going to pull up the 3-year view real quick. And as you can see, around August and September, we had hit near 5-year lows. The only time it was lower was when December 2022. So as you can see, this is starting to steadily rise. All right, so now that we have a better idea of what this metric is, we can fill out our cheat sheet. So we're going to put the link to the trading economics page and the current data. So currently it is 39, it's been trending up, and it is the highest it's been since May, which is 7 months or 8 months. Math. 7 months. All right, next up, we're going to take a look at our building permits. This is the most critical leading indicator. Permits are literally Weyerhaeuser's future order book, and they do predict construction before it starts. Here we do have our link to the trading economics page and the current data. I'll pull up the website in a second, but we're sitting at about 1.33 million units as of August 2025. The way this predictability works, a permit leads to construction, which leads to lumber demand. There is a very reliable lag time of about 3 to 6 months. The Fed action rate cuts is specifically designed to simulate lending and drive this number higher. So again, all the way down at that 1.33 million, this is a 5-year low. Low just confirms that we are actually buying in at the bottom of this cycle. So just like we did before, let's add our clarifying data for permits. So again, we have a quick summary. Directly indicates future demand. Rising year-over-year lumber demand will spike in 6 months, and falling demand is drying up. We have our link to the trading economics page, and we have our current status. It's flat or down, and it's the lowest since 2020, ultimate leading indicator to watch to try to project out revenue. All right, so let's finish by reviewing lumber. All right, so the reason lumber is important, this directly affects our adjusted funds from operations or funds available for distribution. Here again, we have the trading economics page. And as you can see, we are climbing out of this hole, and we have been really stagnant since, well, about 2022. So just like we did for the others, we will input the link for ease of access for future monitoring, and we'll leave a brief description as to what the value tells us. So for lumber prices, we are looking at lumber futures. This is a value most directly linked to funds available for distribution. Typically, below a 400 price, we're only going to see the base dividend only. The stock will stay flat. If we hit above that 600 line, it's boom time. Expect stock rally and variable dividend. We have our link to the trading economics page, our current value, which is 556. And again, we're near 12-week. We are recovering from 12-week lows. So if any of this confuses you, or if you want to follow along as I update these models in real time, you can also get access to my full research reports if you click the pinned comment down below to join my Patreon. That's where I keep the records of all of my deep dives and countless hours that I spend researching companies. Okay, now that we have all of the current data for context, let's discuss how to use it to project out a future price. So this is my sensitivity scale. The sensitivity factor is lumber prices. So as you can see, we have our variable lumber price. In general, the sensitivity factor or multiple for every $10 increase in lumber equates to roughly 45 million in EBITDA, or that translates to about 5 cents for funds available for distribution per share. I hope this chart is relatively self-explanatory, but in general, what we're aiming to do is translate the price of lumber to a share price. The way we do that is by using the sensitivity and EBITDA contribution that each $10 increase in lumber provides, and multiplying that by our adjusted funds from operation, AFFO, or FAD in this company. We can then use that to set a range of where we would expect the stock to trade at, or at least where the fair value should be. So in general, for a healthy REIT, we're looking at 22 to 25 times the price to adjusted funds from operation. Therefore, Therefore, if we have a lumber price of $580, this would be an increase of 40, which is 20 cents of funds available for distribution per share. We can add that to the base 78, which we got from the 540 value, to be 98 cents funds available for distribution per share. We then multiply that by 22 to get 21.56, or 25 to get 24.5 as fair value stock price. So with that, you can take just about any projected lumber price and then tie that to where the stock should be trading at. Just imagine if we got lumber all the way back to 1700 like it was in 2020. Anyway, I really do hope that this helped you out. Let me know what your thoughts on this company are. And in general, if you liked this video, I'm positive you would like the rest of my content. Please don't forget to subscribe and check out this video, which goes over the 3 stocks I'm buying in December. Anyway, that's going to be all for this one. Have a great day.